So this is all about the money, this panel. This is about how all of these dreams and ambitions are going to be resolved. Okay? I'd like to just start by asking you all one very short question. And in answering that short question, I think it would be good if you tell us a couple of sentences about who you are and what you do. But just use this question as a way of introducing yourselves, but also telling us what's going on for you. So everybody wants to become the next SpaceX, but what are the ingredients to be successful in that world? What types of things are investors seeing the biggest returns in? Why is space sometimes so hard? So the question I have for you all, and I'll start at this end, is what do you look for when a new space company approaches you? And I'm thinking about, what is it about them that excites you or makes you think, oh, this is something that could succeed or is investable in?
Yeah, so Joe Zlokowski, CEO and founder of Relm Insurance. We started Relm in Bermuda back in 2019 after receiving our license from the Bermuda Monetary Authority. And really Relm's kind of differentiator in the market as an insurance company is that we're constantly leaning into the future, right? We established ourselves with a strategy of making innovation resilient, and we've spent the last 5 years putting our capacity and our insurance products behind different companies pursuing innovation in really important sectors that we believe in. One, of course, is what's happening within the space economy. And so, we have a really unique perspective as an insurer because we have companies coming to us globally at every kind of subsector of the space ecosystem that are looking for different types of coverage. And for us, regardless of the operation or maturity of the company, it comes down to transparency and access to information, right? So a lot of the coverages that we're putting together are bespoke. They're very accounts-based, right? Based on the facts and circumstances of a particular company, operation, and exposure. And to the extent that a company is well-positioned to give us access to that information, we'll put as much of our capacity and support behind those companies.
Okay. Well, over to you. What do you look for when a space company approaches you?
Great, thanks. Well, I think we have the privilege of being the world's first space-focused investors. So we've been actively investing into space since late 2016. We've now supported 133 companies across 30 countries who've gone on to raise $5.5 billion. And over the last few years, we've had 4 companies who've gone on to list for in excess of $1 billion at IPO. So what do we look for? Well, we built our entire thesis originally around backing venture scale opportunities with companies who are very much looking down. So that digital infrastructure in space, but that was enabling us to map, model, manage an entire Earth ecosystem in near real time. So we felt the first businesses that were really going to be built in space were going to be data companies. But it was companies who were building their own digital infrastructure in space to bring that proprietary data to use and to bear in terms of addressing some of our biggest challenges. So those early IPOs were across constellations in the main, so across telecommunications and Earth observation. Our most recent IPO was in ISAM, so that was astroscale on the Japanese market. I think what's interesting for us is now we still think there's huge opportunity within the Earth observation market, the telecommunications market, but what we're really starting to see is this move into the in-space manufacturing environment, the optimization of low Earth orbit as well. So space sustainability, satellite life extension, data links, edge processing, and then also manufacturing from a life sciences and semiconductor perspective as well.
Lots of infrastructure and actually building out capacity is what seems interesting.
Absolutely. I think we're at a stage where it's a little bit akin to the 19th century. We've built out the railroads there, that digital infrastructure, and now we're really looking to optimize that infrastructure, building the services industry around that. And in fact, that's where we're now seeing a lot of capital going in the market at the moment. It's going into both the services side of the industry itself. And I think that's evidencing that global investors are saying, actually, this is an industry that is now here to stay, and this is a good home for our investment capital.
Thank you. Shruti, what about you? What do you look for when it comes to space companies that approach you?
Hi, everyone. Shruti. I feel like this is a post-lunch shift. Well, part of Future Bank Capital, so give you a little intro. We manage about 300 to 400 million, well, 350 to 400 million in assets across a couple of different funds. And we're based in the UK, but have funds that invest in both the UK as well as globally. The fund that I sit on is called the UK Innovation and Science Seed Fund. It is a mouthful, so we have an acronym, which is UKI2S. We manage about 110 mil in funding, and we are invested into by various government agencies. So that's the UK MOD, the UK Atomic Energy Authority, the Biotech Research Council, and now most recently the UK Space Agency. So we've got focuses across, let's say, fusion energy, engineering biology, defense, security, and now space, which just means that we've got that much more patience, I think, given the sectors we invest in. And I lead our space fund. We look at early stage deep tech. So we're talking first check-in, first institutional investor. We're very early, and my colleagues will say, I say that often, but it's, we go in as early as TRL4 sometimes. We're not a venture builder, but sometimes we find ourselves supporting companies actually building their business models. And more so in these deep tech sort of sectors. What do we look for? We're not looking for commercial traction. That's something that I hear a lot of VCs say, so let me get that out. What we look for is usually a team that really understands the problem that they're addressing. Who cares? Who will pay for this? What does scalability look like? Go-to-market is another piece, just to have, we don't expect teams to completely have nailed all of it, but have a sense of what your go-to-market would be and having spoken to a couple of people to get that validated. Another big one for us is just market size, and I think that that applies quite a bit to space as well. For instance, we've seen lots of EO sort of applications across, from floods to, weather prediction to agri-tech. And we're always asking, what does that market size look like for your customers? Because at the end of the day, when you're looking at it from a VC lens, you have a certain amount of scale that you want to get to in 10 years and a plausible exit strategy. So I think those are sort of the few things that are quite key for us.
And just one follow-up, how far do you go on the sort of spectrum between things that could work and have this very clear defined problem, and then the other things that space company want to do, which is to imagine big imaginative thoughts. Where's the sort of line between the two?
Yeah,
you want to encourage the latter as well eventually, but
I think we were just talking about it earlier about existing markets versus creating markets, and I think for us I'd say from a portfolio construction point of view, right? You kind of have that many investments that you can make. I think we have the risk appetite to do both. So we wouldn't say that this is not something we'll invest in just because the market doesn't exist today. But what we're looking for is signals. What we're looking for is those conversations with potential customers saying, yes, that's a problem. If you can solve it, amazing. That would be something I'd be interested in. I think that's the willingness and the interest is something that we'd be keen to see for that sort of creating market piece.
Thank you. And Sven, how about you? What do you look for in a space company?
Sven Brunswick, Advanced Space Ventures. So we are an industry insider-led VC fund. What I mean with that is that the fund has been created by Bülent Altan, who's been early leader at SpaceX. He worked there for 13 years, led the avionics team, responsible for Falcon 1, Falcon 9, Dragon capsule, later delivering the first prototype Starlink satellites. And the rest of the team is similar, maybe not 13 years at SpaceX. Actually, one colleague who has been 16 years with SpaceX, but everybody is from this industry, right? And I guess this sometimes creates this confusion with founders approaching us that we are tech nerds and super excited about the technology they're creating. In the end, we are not. We really don't care that much. In the first instance, we care that you're excited about a market opportunity. We like to see demand-driven businesses being created with the technological moat that you can build over time, right? You need to have your core IP in place. You need to build something that is hard to replicate to make an interesting investment case. But in the end, we're not excited about the technology. We're excited about the founder, the team, having everything in place to address a well-sized and well-understood market opportunity. So demand-driven businesses is a key one for us, and one we see where the industry, frankly, is lacking. There's a lot of companies out there, founders out there, that create perfectly fine and amazing technological innovations or solutions, but it's not yet a commercial solution you can sell to customers, right? So there's a differentiation, or this is the thing we want to see. Can you address the customer, and can you address it in the next couple of years, rather than in 15 years' time? And does your market already exist? If your market is one that relies on 10 other things going well before that market even comes online, it's not, at least for us as a fund. There are funds out there that do that, and that's all fine and good. For us as a fund, we need to see a real tangible approach to it. We see that often in dual-use type of applications. Lots of the satellite industry is dual-use, and quite often the government is the first customer of companies we work with.
Joseph, can I just talk a bit more about how you manage risk as a startup? So what does it mean to manage risk as a startup in an industry where virtually everything is risky? We know that space is hard, it's dangerous, all these things. What's good practice when it comes to building confidence with investors? You mentioned first transparency. What else can you use to show that you understand your risks? And
yeah, I mean, we look at a lot of qualitative and quantitative kind of signals, and different from my panelists who are making long-term investments. As an insurance company, we're making kind of the equivalent of a 12-month investment, right? Our typical insurance policy is a 12-month policy, right? So we're not necessarily making bets for the long term. We're trying to assess a company's ability to operate as a going concern for, let's say, a particular launch or for a 12-month period. So we're looking at cap tables, we're looking at entity organizational structure, we're looking at credibility of board and executive members, we're looking at cash flow runways, we're looking at market positioning, we're looking at the claims or the likelihood of achievement of milestones in investor decks and how they're communicating to investors, right? A lot of these things signal the maturity of a particular operation and their ability to rationalize their position in the market and ultimately execute. And as an insurance company, we're retaining that risk on our balance sheet, right? And one of our unique propositions after issuing thousands of insurance policies to companies operating in 35 countries is we're typically looking at risks for which there's limited reinsurance support, right? So oftentimes we're warehousing a lot of the risk on our own balance sheet, which magnifies the importance of having access to the qualitative and quantitative things that put us in a position to say, this team is a good operator, and we're willing to put our products and support behind them for the next 12 months.
Can you get specific? I mean, are there companies, or is there a company that has done it really well that others can learn from?
I mean, typically we tend not to disclose the types of specific companies that we insure. But we're working with a micro propulsion company that's working on propulsion systems for satellites, and from a technical competency, they're checking all the boxes. From a funding standpoint, they've had institutional funding from credible investors, and their commercial runway has some government contracts lined up in the pipeline. And that particular firm is looking for directors and officers liability insurance. So, that may seem like a less sexy type of insurance to provide these companies, but when you talk about what enables the next space oddity to become the next SpaceX, you got to be in a position to raise funding, right? And a lot of these companies are going to need to appoint independent directors to their board or bring on board competent executives. And a policy like directors and officers liability, which we extend to the market quite a bit, is an enabler in that sense.
Sven, you mentioned in your answer to my first question that you're not so interested in companies that have multiple steps where there's lots of ifs, basically. These 10 things have to happen to make this thing work. But there's a balance, isn't there, between sort of thinking very far forward, thinking about what markets might exist, looking at the horizon and maybe beyond it, and then versus things that are so obvious that everyone is about to do them. Where is that line? I mean, the latter, the long-term thinking, surely is a useful thing as well. It can't be that everyone's thinking short-term and just what is possible next.
Yeah, and that is an interesting line, right? Maybe let me be specific with one example. What we see, I mean, we do have a 300 billion or so, I mean, we can argue about the number, space industry in existence today. A good chunk of that is geostationary satellite operators providing TV and radio broadcasting and some sort of broadband broadcasting to remote places. Good chunk of that is being disrupted by LEO constellations or new constellations coming online. Starlink is a big one in the room. There's others as well, right? What we are excited about is the opportunities that this disruption brings, and spaces left and right where new folks can come in with differentiated business models in the connectivity, satellite connectivity industry that is existing, right? And we do have, for example, one portfolio company, K2 Space, building very large satellites, essentially built for the Starship era, that have massive amounts of power available on a per platform basis, that you can bring a lot of broadband capacity into a MEO orbit, which is a way out for lots of the geo operators that are at the moment in a little bit of a corner. So this is something we are excited about because it's an existing industry and it's being disrupted at the moment, and there's a lot of growth potential as well because we had these numbers over and over again. More than 4 billion people or so are not yet properly connected. Many tens of billions of devices need to be connected and so on, right? So satellite connectivity is super relevant, super interesting. Something that is not fitting for our fund, at least, is and probably I'm going to hate myself saying that on stage because never say never, right? But in-space production of goods for utilization on ground is something that we probably wouldn't touch right now with our first fund because it does require, for example, an entire ecosystem of down mass being in place. There's lots of companies building capsules, and we're excited about that. It's great, but this needs to work before you can build a business model on top of something that needs to bring that end product, whatever it may be. It could be a drug, it could be a semiconductor product, it could be something else, right? Bring it down to earth for the eventual end user. So that maybe with 2 examples explaining a little bit where our thinking is and our line is of what is interesting and fitting for our fund and what isn't.
The in-orbit manufacturing there's a whole session on that later for those who are interested, so we can talk about that more. But Shruti and Rob, I'd like to get your view on the same question because I think obviously every fund will have its own line in this. But I'm curious where the line is for you on things that are too far forward and futuristic and things where, you know, there is a market and it needs to be tapped and businesses can go straight away. Shruti, maybe you first.
Okay, I think in terms of, if you look at a normal fund, cycle in a way, it's usually a 10+2 sort of model. People are looking for exits within 10 years. So you're looking at something that is achievable in that sort of timeline, where there will be commercial contracts at least in year 4, 5, 6, and then scaling up from there. I think what would be, for instance, and again, never say never, but what would be quite a challenge for us to gain conviction around would be something like Lunar. We're very excited by it, but is that a VC backable play just as yet? Maybe not. Because what's the business model? Who's going to pay for it when whatever you're doing, right? So I think that's where we'd probably draw the line a bit, where we say that there are too many layers of uncertainty. A few are okay. And I think, so if someone were to come to us and say, I can kind of do 5 years of R&D. This also goes to Sven's point about different VC funds are structured differently and have different risk appetites. So because we've been doing early stage deep tech for so long, we're doing things like biotech where risks are binary sometimes, right, for 5 years. And my colleague always says this thing, and I quote him, but he says, it's not a problem if it doesn't work. It's a problem if nobody wants it. So, we've tried it and it didn't work. That was a bet. That's what we're here for. So I think that's where we would kind of draw the line, and we're okay with that sort of 5 to 6 year kind of R&D timelines if required. But yeah, so in-orbit manufacturing for us is still possible. It's something that if you can figure the business model out and you can get a bit of understanding around what is pharma looking for, and is it a volume versus value kind of conversation, and if there is sort of procurement available for it in 3 years, 4 years, whatever it is, it's still a bet that we'd probably make.
Specifics. I like specifics. Rob, how about you?
Well, I think we all need to remember that we are ultimately managing other people's money. And we've gone out to those investors and we've said, we are going to give you a better risk-adjusted return than you're going to get elsewhere in the market. And space is what's going to drive that. But that's over a certain time frame. So we are driven by the market. And as investors, we'll build a thesis around the commercial market opportunity. And then we'll drill down on who we think can win out in that category globally. And that's typically, who's got the strongest team. But, any opportunity we're going into, it's really around that sort of 5 to 7 year time frame that we're looking at to get returns. And we also manage a listed growth fund, which is patient capital, but you can't invest too far ahead because it's still going to damage and impact your internal rate of return as well. So you can balance it out across a portfolio. And in fact, when we invested into Astroscale a number of years ago, Astroscale, for those of you who don't know, is a Japanese company that's now floated on the stock exchange in Japan. They're doing space debris removal. From our perspective, we recognized that there was going to be a commercial market opportunity, a very significant market opportunity there. It was really a question of timing around it. Because we were invested out of our listed fund, we could be more patient in our decision making, but we felt the winner had ultimately already been chosen, given the weight of capital being allocated out of Japan into that opportunity. So we chose not to wait until the market came along because we knew it would be there, but we could afford to just be a little bit more patient with that. But there's not many investment funds out there that can do that. And I think anyone needs to really articulate what that near-term commercial market is. And I think the great thing about space tech investment is that we are addressing current problems and challenges that are impacting humanity globally today. And there's companies out there that are doing that, from telecommunications, from Earth observation. And I think in the future, we will look at space as an infinite source of energy, looking at space-based solar power, asteroid mining, other opportunities. I think, to be honest, probably too much money has gone initially into the sort of cislunar type opportunities where you've got a single customer, a government driving that opportunity. I think that's for those who are extremely patient, perhaps more of the endowments, long-term family offices, and so on, who can make different kinds of decisions. But for normal institutional VC, we do have those sort of timeframes around that 5 to 7 year period.
Since you talked about markets that you're interested in right now, what do you think are the most interesting, exciting space markets in the next few years? I mean, Sven mentioned satellite communications. Obviously, that's something that's on everyone's mind, I guess. But what else? What's particularly interesting to you? And you mentioned a few things you're investing in already, which is basically space infrastructure, those services. But are there specifics there that you think are particularly exciting?
So I think the big one that we need to unlock the entire industry, I think we've got a massive, huge amount of capital has gone into platform Earth observation opportunities. What we really need is AI to unlock that opportunity. With better AI, it's going to change the economics for the end customer, the end acquirer of this information and insights. And I think we're starting to see a lot of money going into it. Was one of the biggest deals from the last quarter was World Labs, which was 230 million. So I think that's going to unlock that whole industry. I think we're going to see more satellite companies moving towards data fusion, so combining different data modalities as well. So that could be hyperspectral and radar data as well. I think we're going to see less of these single feature constellations coming online. So I think the biggest game changer for us is going to be AI, but then also it's going to be dual use technology.
Do you mean AI on the satellites themselves, or processing on the ground?
Both. It's going to be, certainly we've got a company in our portfolio that's already doing onboard AI processing, which is great because you don't have to transfer that huge amount of data back down. You can also, it changes the latency of the information as well, so you can retask in real time. And we'll see more of it on the ground as well.
Joseph, in your experience dealing with companies, startups, what are the things that you think unsuccessful ones do to make them unsuccessful? What should startups avoid?
Yeah, I think Shruti made a great point, which is being able to clearly identify the problem and the solution that these companies
That's table
bring.
stakes, right?
Yeah, but I think also, a really great example happens to be SpaceX, right, in terms of unblocking obstacles that are preventing scale, right? So back in 2016, I was setting up some reinsurance infrastructure in the District of Columbia, DC, in the US. And at the same time I was setting up this infrastructure, SpaceX had just gotten approval from the FAA to utilize a captive insurance vehicle, right? Their own insurance facility to provide them with launch liability insurance, right? They were beholden to the market. There was a bottleneck there because there were only 2 insurers and reinsurers that were willing to give them a la carte launch liability cover at predatory rates, in impeding their ability to achieve the scale that they needed to be commercially viable. And so instead of continuing to bang their head against the wall, right, insurance, an industry that's worked largely the same way for the last 350 years, they looked at an alternative solution, right, to build infrastructure that was going to enable them to obtain the type of cover that they needed, to check the regulatory boxes, and start scaling their launch volume. So I think that attitude is really emblematic of the way I think early stage entrepreneurs need to be looking at the commercialization of their products and services.
Yeah, I wonder if I could ask for a couple of quick answers to the same question from the rest of you in the last few minutes. Sven, what should startups avoid doing? What kind of mistakes do you see happening that you wish they wouldn't do?
I mean, it sort of goes back to what I said in the beginning. Lots of startups are not being as market-driven as they should. In the end, every CEO should be most excited of all the things about the market opportunity they're addressing. And we see lots of companies that are not most focused on that, but they're most focused on the technology. In Europe, that has this dimension that they're then typically taking up lots of grants from Europe, from ESA, from others, to build more and more and more on top of this technology,
Government,
but they never actually address demand in the market, right? So avoiding grants and seeking real customers.
So avoiding government handouts, basically.
Not all of it, right? But making smart use of it
Yeah.
to not need as much equity investment.
This is an industry that's had a lot of those before, so that's why they're probably stuck there. Shruti, how about you?
First thing, I guess, is not raise enough money. I think there's, and I know that it's like a, it's already a struggle to raise this much. But I think sometimes there's this, just the way people think about runway is a challenge because, they think, I'll put a 1 mil sort of round in front of you because I think I can get that away. But that's not what you need. You need 2 mil. And so when you hit the end of that 1 mil, you're going to come back and ask for money, but you haven't hit your milestone. So your valuation is still the same, which means we're all going to get more diluted now. So I think just not raising enough money and also not understanding the intention behind how to craft that money sort of ask. The second would be probably to do with, I think, I wouldn't say not as strongly, but I think even though you're raising a lot of grant funding, I think grant funding has its place. So when you're talking to equity investors, the lens is completely different. So sometimes with grant funding, you're funded because there is a capability that they want to build, but may not necessarily be solving a problem. So I think just understanding, that I guess is a difference. So I think those would be sort of the 2 things to avoid. And also I think like sometimes when they call themselves, I was just going to call out the point that Rob made about dual use. We have a defense fund and we have a space fund. So together we're deploying about 25 million in that pot. And so dual use is super important for us. And we love companies that can kind of explore both applications and say we'll run one in parallel to the other. So just avoiding kind of just bracketing yourself and pigeonholing yourself and saying I'm only a space tech company or I'm only a defense tech company, but having that the breadth of use cases sometimes helps with VCs being able to see the market grow suddenly.
Rob, we've got 1.5 minutes left, and I thought it'd be good to sort of maybe finish up with just what does success look like for a startup? I mean, the companies that have been very successful. SpaceX and others, they're on a different track right now. But for the companies that you deal with and you're excited about in the next decade, what does success look like for you? Can you?
Well, I think that's a great point because ultimately that comes down to your capability to fundraise. If you're not articulating outrageous success when you're looking to raise funding, then you're not going to raise any money because we need outrageous success to maintain our position in the market. If we invested on every single deal we did, we returned 2x capital, we wouldn't be able to raise another fund again. So, it's really important that you're really thinking about this from a market perspective. but you're articulating a multi-billion-dollar market opportunity because, if we're going to invest out of a $100 million fund, we need companies that are going on to be worth at least a billion in size. So this goes back to a point everyone else has really covered here, which is science doesn't make money, markets make money. So make sure you understand the market and you're laser focused on that. And from our perspective as financiers of this market, the biggest risk for us is we buy into the opportunity, the team, but the big issue is, can you fundraise for the subsequent rounds? Because here it's super capital intensive. Do you have the capability to not raise 5 million from seed investors, but 50 million, 100 million, 200 million from the market? Because if you can't do it well early on, you won't do it at Series C or D.
Rob, thank you. That's almost perfectly on time as well. Science doesn't make money, markets make money. I'm going to remember that. You're in the right place to make that statement. But thank you very much to my panel. Really, really amazing to hear your thoughts. Can I have a hand for them, please? And then